Good morning, everyone, and welcome to the European crossover webinar. And we're finally at month end. We've seen some rebalancing. We've also seen equities kind of spin the wheels up in here. We'll just take a quick look here on the NAS. You can see we had actually pulled back and potentially, I mean, we had some resistance here, but we could have gone and made a run for what we're looking potentially for was 79.60. Instead, we saw the market roll over, and then that pulled the SPOOs down, and then we saw a quick flash rally. I actually was working a bit in the SPOOs. I got a little bit too greedy on the fill and paid the price for being too greedy, not getting the fill, and then we summarily turn around and see the SPOOs rally 15 or actually nearly 16 off of the lows. We did see a pretty good snapback rally here in NAS, but it didn't quite make it to that 79.60. But we did take out the prior highs. I'm kind of dilly-dallying around. Maybe we'll get one more thing up popping here. Kind of doubt it. In Asia, I was looking for 26.37 and the SPOOs to short, and then a rebound back to 34. Well, 34 has been about as good as it can get. On here, we'll take a quick look there. So it looks like we're paring back a bit. As I mentioned, we had VWAP here at 26.18, and then I had a support level at 26.15, 26.16 and a half, and I guess I just got a little bit too greedy. Looked like the low was maybe 15 and a half. I was working a bit at 15, and then we just kind of popped up, came back, and then we launched when NASDAQ rallied. So unless NASDAQ turns around and hits some more stops, I kind of doubt that. This might be kind of this area as good as it gets, but we'll see what happens. Crude oil is trading at 21.34, so we'll go on and move into what we've had as far as economic data. Keep that here for now. We did get German employment come in. Unemployment came in 29,000. It says actually that was a Reuters poll, came in at 1,000. So unemployment change. Let's take a look here. We do have a Spanish account balance that came in at right here at the top of this hour that we're at. Then we have Italian consumer price data. That is going to come in, is going to be at the top of this next hour. And then we do have Eurozone HICP flash. Obviously, I mean, a lot of this data, you have to kind of take it with a grain of salt because some of it might be just right before or just at the precipice of when we were getting hit with the coronavirus. So it kind of is a little bit of a mixed bag, how much relevance you want to place on it. As we move into the States, and at 6 a.m. Eastern, we will have Italian producer prices. We will have 8:30 Eastern, we'll have Canadian GDP as well as producer prices. And then at 9 a.m. Eastern, we'll have Case-Shiller. As well as 9:45 Eastern, we do have Shy PMI and 10 a.m. Eastern, consumer confidence. Let's just go and move into FX. So just going in, we are seeing the euro a bit weaker here. We did see some pairbacks on some of these markets. We see also the dollar index with a little bit of a not perfect, but a bullish cloud cover, and we've seen that kind of extend further back here, and we've got some resistance that'll be coming up around 99, 92. But let's go on and take a look at the analysis, or not analysis, but the news quickly. Dollar up, but the yuan sluggish as traders are skeptical of Shanghai PMI, or China PMI, I should say. Anybody would believe that nonsense has got to be smoking crack. Seriously, that all of a sudden after all this stuff, China posts a big strong number. That's just the silliest thing I ever heard of. Obviously, they're fudging with the numbers, and like I said, I think you have to have, you know. Maybe only a quarter brain left if you actually believe anything come out of China when it comes to this data, with the way that data came out up above 50. So it says the dollar rose against the yen on Tuesday as Japanese investors and companies rushed to cover a shortage of the U.S. currency before their fiscal year end, but sentiment remained fragile as the global coronavirus crisis showed no signs of abating. China's yuan was little changed even after a key survey showed manufacturing returned to growth in March, as investors remain skeptical of the uptick given many businesses are still struggling to resume. Like I said, a bunch of BS. Got to call it for what it is. I mean, this is data that many of us are going to trade on, or that are going to want to have faith as far as, hey, is there something real? And when you see something like the swing that they got after what they've been dealing with, then it's a bunch of horse manure. Since the pound fell against the greenback and the euro as a sovereign ratings downgrade continued to weigh on sterling, underline the strain on public finances and from a much needed massive fiscal stimulus. Tuesday is the last trading day for Japan's fiscal year end and the end of the quarter for major investors elsewhere, which could lead to some volatile swings as big players in the currency markets close their books. However, analysts warn with an almost certain global recession due to the coronavirus will remain a dominant influence in trading and eventually favor currencies least affected by the economic downturn. The talk is Japanese names are short of dollars, which is likely to keep the dollar bid well into London time, said Yukio Yoshizuki. We have to look beyond and focus on what's going on in the China's economy. Even if there's some decent data from China, we all know that's a lie. I cannot be optimistic because economic activity in many countries is grinding to a halt. China's official manufacturing purchasing manager index unexpectedly showed activity swung to expansion. What do you know? In March, but traders tempered their optimism because China's economy is still expected to suffer a steep economic contraction in the first quarter. Only on Monday, the People's Bank of China unexpectedly cut its reverse repo rate by the most in almost 5 years to relieve pressure on the economy. So why would you do that if you have fantastic, data coming out? So that's what I'm saying is, as my mom used to say, actions speak louder than words. Moving on. The dollar may be set, and this was pretty interesting. I thought I wanted to touch on this. Dollar may be set for another damaging bout of strength. This is Reuters does own analysis, so this is really more of an analysis piece than actual news. But it says in the 2008 financial crisis, as any guide, the world markets, which have barely had time to recover from the dollar's 9% surge in mid-March, may be set for another damaging bout of strength in the greenback. In the last 10 days from March 9, the dollar leapt against other currencies as companies and banks bought in to pay their creditors and trade partners and suppliers. Money market funding rates jumped and share prices plunged as desperate U.S. currency liquidated investments. Such a spike in the dollar, the choice of currency in global commerce and investment used up to 90% of all FX transactions is bad news as it rapidly tightens financial conditions, exacerbating the very problems that the policymakers are striving to prevent. Since March 23rd, the surge has faded. The U.S. Federal Reserve cut interest rates again, injecting trillions of dollars. But as of this pause rather than a halt as the dollar's upward path, Brown Brothers chairman strategist Hans Solo, who worked at the Fed in 2008 as a currency trader, is among those expecting another bout of dollar strength. Policymakers understand the funding shortage problem well from the previous crisis, and they rush to solve, but this crisis could very well see a real economy shock. Central banks have repeated the stimulus playbook of 2008. The playbook being, like many analysts, through all of 2007 into 2008, the dollar index fell steadily as hedge funds ramped up short positions. The respite was brief. The currency took off again, rose another 15%. Uncertainty this time is in the twin demand and supply shocks caused by the virus that could be indefinitely as millions are sickened across the world. Move higher would also fit with the dollar smile theory. put forward by Morgan Stanley that the greenback strengthens in times as investors rush for safe liquid assets. Right now, we're getting the NASDAQ at 79.38. Remember, we're looking for potentially 79.60. Anyway, like I said, it's a talk that this may go on and reassert itself. So let's just go on and move on to the analysis now. I don't spend too much time reading news when things are happening. Bear with me. Let's get on to the analysis. What I can do is I'll post that story in the chat later on. So let's go and move on quickly to the euro. So the euro on Monday stayed within Friday's candle bodies range, finishing near the lows. Resistance will be 10.95 with support at 10.05. Well, we've actually come down here towards that 10.05. We actually even dipped a little bit below it. You can see right here. And we've got this level coming in right across, and that level comes in right there at 9.93. So let's go on and go with this for the support of 9.93. And we're going to go with that resistance at 10.95. So people are looking the other way, and at least see they are taking maybe a short side. They know what their risk is going to be, which is going to be 10.95. Keep an eye on these indices. NAS is at 79.39, pushing up here against the highs, 79.40, and SPOOs, like I said, they're 26.31, not too far away from their highs. Let's go move on to the cable. So cable traded in a restrained range on Monday. Resistance for Tuesday will be 24.88 with support at 22.85. Well, actually, you can see right here, right there, you get this long medium-legged doji. We'll go with that, which is going to be 22.62. We actually moved a little bit below that, but it'll be 22.62. And on the upside, right here, the close right there, which is going to be 24.22. As I mentioned, with these big moves, we had 24.23, we'll leave that. With these big moves, you can quickly give a decent amount back without even making much of a dent. We are seeing the NASDAQ start to roll over again a little bit. Not a whole lot, but SPOOs made it up to 26.32, they're 26.29. Let's go and move into the Aussie dollar. So the Aussie closed higher on Monday within a very tight range. Resistance is going to be 62.68, which is a 50%, followed by weekly level 63.03, and support is 60.63. So once again, it's going to be 62.68. And support will be 60.63. And we got that marked. Let's move on to the Kiwi. So the Kiwi has formed a harami, suggesting a pullback may be imminent. Resistance is going to be 60.77 with support at 59.68. Looks like we've already taken a dip down here, and support came in at 59.45, but we'll stick with that 59. Actually comes in 59.57. We did dip a little bit below that, so we'll go with that with 59.57. And resistance is 60.77. And that's in place. Let's go and move in now to the dollar CAD. So the dollar CAD rallied back on Monday, closing above Friday's high with crude testing sub $20. Tuesday's resistance will be 42.80. Look, that 42 seems to be keeping it in check, but it's going to be 42.80 with support at 41.83. So 42.80 with support at 41.83. You see, we're just kind of bumping our heads up against this 42 even. And support at 41.83, 42.80, 41.83. With that, we'll move into the dollar peso. So the peso spiked on Monday, taking out 24.50. You can see that that was one heck of a spike up in here, taking out 24.50 before paring back sub 24. Support is going to be 23.48, followed by 23.35, and resistance will be 24.24. So we're looking for 23.48 on the dip. And resistance will be 24.24. We've already made a run up here today so far at 24.15. So it's going to be 24.24. Let's go move into the dollar yen. Okay, so the dollar yen closed with a medium-legged doji on Monday. You can see that right there, suggesting a short covering rally. Resistance is going to be 8.96. You can see that up there. Here's the medium-legged doji suggesting a short covering rally after this amount that we've gone off. 8.96 is going to be the resistance. Support is going to be 7.89. And on to the dollar index. So the dollar index formed a bullish cloud cover pointing to an ensuing rally. Resistance will be 99.95 with support at 98.69, followed by 98.33. Now this isn't a perfect, bullish cloud cover, but because we're right there. It's open and close right there. Preferably would be a little bit lower, but still close enough for government work. So once again, resistance on this is going to be 99.95 with support at 98.69. With that, we'll go and move on into the cross rates. Okay, you can see Monday's close very, very, very tight range. So we're just pressing up a little bit here against these levels. Not a whole lot to trip any stops. So resistance is going to come in right there across this body, which is going to be 65.56. And support to trip stops is going to come in right there at 63.95. You can see here Monday's close really took a turn lower here, and you can see where the key on the euro yen, you can see where the key resistance is going to be right there, the key level that we have marked off in pink here, almost like a pivot that's been in place for a while. And that's going to be 1974 on the upside. And on the downside for support, it's going to come in right there, which is going to be 1865 for support for euro yen. And you can see here, euro odd continues to pair back. I thought we'd probably hold in here, and because the market has been pulling back for several days, but we'll continue to push a little bit lower. You can see right here coming in there for support. We can take a look at if we can see something a bit more definitive. Right there. 76.67. And on the upside, the trip stops right there. Come across. It's going to come in at 81.20. Still fairly wide ranges in the euro odd. We'll move into the euro kiwi. Pretty much the same setup as the euro odd. We're kind of pressing a little bit lower. Where the key level is, you can see it clears the bell. It's going to be 84.84 on the upside. And on the downside, we'll see what a shorter time frame looks like. You can see all these touches coming across in here, which is about where we're at. You can see that. So it's going to be 82.37, 82.37. This is interesting with the Aussie yen. We had these back-to-back hanging men, and it looked like we had the potential to work lower, but we're still pressing higher at this point. Bit of a surprise. Resistance is going to come in right there. You can see that coming across. Well, right there. 67.40. And support. It's going to be right across these highs. The touch is coming right across, which is going to be 65.52. Moving on to the guppy. We're kind of holding our own here. We did have a bit of a hanging man here on Friday, and then we kind of just sat there within a very tight range here yesterday, and here we are, an even tighter range. Resistance clears the bell, still remains 34.15, and support to trip the stops is going to be right there, 32.57. So looking here at the sterling odd, we're finally starting to pare back a bit, and we are coming into some support here, but we've already dipped lower to trips and stops, and we're bouncing right back up. So let's go on and take a look at what we are on a 2-hour chart. Right there is going to be support. And they actually tagged that and went below that. But right there, which is going to be 98.91. And on the upside, we are getting NASDAQ right now, 79.46. Remember, some key resistance there is 79.60. Resistance right now will be right there at trips and stops. 0089. And that wraps up the currencies. Euro is just trading very, very quiet. Look at this, just barely even moving. So let's go on and move into some other markets. A moment. So you can see here, NASDAQ continuing to push higher. We have some resistance, 79.66. Obviously, gold taking a bit of a dip in here on that better strength here in the equities markets. But gold has been trading rather quiet anyways, overall. You can see here, look at this. 230, we were trading at 16.37. We've only come down $2 since then. We're going to move into SPOOs so that we can take a look on the charts for the NASDAQ. There's 79.32. And I was looking here, you can see right there, 79, barely right there, 79.60, just moved just a hair there. So, and you can see some touches here. So we could knock out those stops at 79.60. The next key level of interest is actually at 79.90. But I'd be looking for a challenge of 79.60. We're not that far away from it. See if they can pop some stops. SPOOs actually went to new highs by just a handle and a half. So we made it up to 26.35. I was looking, remember I told you since Asia, looking for a move up to 26.37. But we've already, what I was looking for in Asia was a move to 26.37, get short, pull back 10 handles, rally back, make it up to 26.34, and then fall apart. Well, look, we've already come off quite a bit. So we've digested that. So this market is potentially, don't be surprised if in the U.S. session, we could actually run up to 26.57. Because now what I want to do was see this market get to 26.37, sell it off for 10 handles, rally back, fail at 26.34, and write it down. Well, we came up short. I mean, actually, this happened, here in Europe. In Asia, we made it up to, what was it, 31, okay? But the point is we've already had an opportunity, you see that, to digest this. And on top of that, the VWAP is holding. So this market still has a potential that if we come in, we can maybe goose some stops. And why is it I haven't been, looking at this point to necessarily short. I'm just like, you know what, let it do its own thing, see what happens. And like I said, I got a little bit greedy trying to come in and pick this thing up at 26.15 when I knew the VWAP is at 26.18 and the support level came in at 26.16 and a half. So I got a little bit too greedy, but you can see where we are right now. And I mentioned this yesterday in the chat room, the 3-day VWAP was supportive. So yesterday when they went down to 25.42, so it opened the door for them to move much higher. I just never expected them to move this high. I thought that we might challenge 26, maybe we go up to 26.05 before we start to rotate back. And obviously, the rest is history. But that 3-day VWAP was very supportive when it held there yesterday. So you can see where we are now, and you're looking ahead. So you can see the 3-day VWAP here now. Now the 3-day VWAP has now moved to 25.60, but it was, yesterday it was at 25.42. It was very key at the time. But looking further out, you can see right there, 26.29, which they've already challenged before. Right there is 26.46. Basically 26.47. At this point, I'd have to say that the market will want to challenge that. I like to catch things on a turn. So that was my thought, is if we would have hit 26.37 in Asia, I'd have been all over that like white on rice and looking for a 10-handle pullback, then a rally back to fail at 26.34, which we hit earlier, and now we failed. But that was, that's after it's already went down. And then ride that sucker down. Well, we've already digested a lot of this move. So right now the market is open. Whether it gets to it or not, the market is open to challenge in 26.47. And maybe even try and pop some stops. And there's your 26.47 there. $26.47 and one little notch right there. You see that? $26.56. And you see they still got the bid up in here. Because like I said, they've already digested this move back. And then on top of that, it held VWAP. So you got that, anybody that's unlike me, that I just like to scalp around, anybody was saying, well, look, the trend is still way up in here. I want to buy these dips. Well, then they came in at a perfect time right there at VWAP, and they're going to try and ride this sucker. So they may just say, okay, I tell you what, if we break 26.26, then I'll bail out and take my profit from there. If not, they're going to probably try and ride it, and they've got the momentum going with them. So who's going to step in, and try and take the other side? Unless you're just trying to scalp. And like I said, certainly I think we're a little bit stretched in here, but right now the momentum is in their favor. So you step in, you better step into very key levels and know what you're, like I said, this move up in here, you maybe scalp it for a little bit, but you got to know that if it works against you, you're going to have to jump out real fast with a 3 or 4 handle, loss. Taking a look at crude oil quickly. We'll work a little bit higher here. We did go sub $20 yesterday. Okay, so since the open, we've been as low as, what, 2025. We've had a pretty nice rally, about $1.50. We've given back, and we're right now at VWAP. Take a look here. Gold's been very, very quiet after the big old rebound stuff. You can see that. Look at that, dead as a doornail. And that's a 30-minute. You'd think this was a 1-minute chart. That's a 30-minute chart. And look at that. Even a 2-hour chart, dead as a doornail. Anyway, that's what we have. Like I said, we're looking further out in the month. Probably see a lot potential still for a lot of movement still in all the other markets too. So good luck trading. We'll see you in the chat room. Thanks for joining us here.